If you missed out on the low in 2022, the higher low in 2023, the breakout in 2023, this is essentially what it felt like through those periods. We've been in a trading range for a little over 3 months, give or take, and the market is getting very ticked off. They are capitulating on their alts, they're capitulating on the market, they're capitulating in general. They think that this is the end of the line. And if we do see another short-term correction down to some key support levels, as I'll talk about in today's video, I suspect that the calls for the top being in would come back in full swing. So I've got heaps to get through with you guys today, along with the traditional finance space, looking at the macro cycle, where we can see that there's a lot more upside potential coming. However, there is always going to be some intermediate, some short-term swings, some volatility in the short term. So hit the like, subscribe to the channel. It is your home of macro cycle analysis. And if you want to support no bullshit trading, investing, data-driven research here, make sure you share it with a friend or family member. Maybe someone who got destroyed listening to the whole meme coin fiasco. All right, let's kick it off with a nice little quote here from Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. We've seen this now multiple times with BTC over this bull market. Look at the low here in 2022. There was even the low here in June of 2022. It did go a little lower. Guys that have been following the channel know we were talking about this then. I was buying at 20. I was talking about it at 25, and then it dropped to 15 for a matter of days. And so there is always going to be those periods where you don't catch the exact low, but it's about the patience in the game. And I guess identifying whether you're seeing a macro low being formed because they take time, or if you still think there was a lot further to go. And we know of many traders who thought that this was going to go to 12K or 9K or even further down to 3K. There's some absolutely wild calls there going down to $3,000 at that time. And of course the market rose from there. Now, not to go on about the history too much here, so I'll keep this relatively quick. You can see that from 2022 and then into 2023, there was a significant higher low. A big move happened out of that period that was about 60%, and then from the low was 60% before we got that correction into the non-banking crisis where everyone was fearful. And then we went into basically a holding pattern for another 7 to 8 months before it took off. So that was at the end of 2023. Took off again, 90, 100% move. Had a shorter correction here, but nonetheless, it was still a significant correction because of the emotion at the time that was all around the ETF. It launched, it dumped, and then took off again for March 2024. So the end of 2023, early 2024 into that final top there that happened with a 90% increase. Then again, we went sideways for about a 7 to 8 month, multiple calls here underneath 60K for the end of the cycle. There was still more calls of the the left translated cycle, meaning that this was going to be the shorter term move to the top, and then it was all over from that point. That was obviously proven wrong after we got a big push to the upside, which resulted in another 90+% move from that August low. And again, all the calls there were that the market was going to go down, people getting bored, they got sick of it, they capitulated, they hated life in the markets, because essentially most people aren't made for the markets. You might be, you might not be. That doesn't really matter. You just got to find what works for you. And if this works for you, stick with it, because these are the times that felt like 2022, 2023, and to an extent, even 2024 in that middle of the year before we took off again. So hopefully I've pointed out here that at the end of the day, you're not trying to catch the exact low. The overall picture here is still bullish, and the traditional finance analysis I'm going to go through with you now is really showing that there is most likely a very strong chance that we've got even further to go with the stock markets, which means that the investors and the old smart money are seeing more upside here, and there's going to be more liquidity coming into the game and most likely spilling over into Bitcoin, and potentially, you bet your bottom dollar here, your altcoin, not anyone else's, but your altcoin, of course. So that's what I want you to take home from this part of the analysis is basically the patience here. And it can be really frustrating. I get it. The other quote here, much of our trading comes down to a battle between our patience and our impulses. And meme coins, altcoins, man, they are made for impulsive people. I don't think any more is need to be said. Everyone is very impulsive in here and very triggered with their emotions. Emotional people come to altcoins and to your meme coins, and of course they're altcoins, and they come to try and make money. They're basically gamblers. Impulses are gamblers. Okay, so the last couple of videos have done relatively well, so people are still out there. You know, I'm keeping track of these views here. They have been ticking up. They've been relatively good, especially in a quiet time. So I'm just sharing that with you guys. Subscribers are still coming through. That's more so from a perspective of the social element of cryptocurrency and investing, because you still want to see those numbers ticking along. In the bear market, you don't see them climb as much, and sometimes even start to drop off, especially with the views. People just aren't interested at lows. So we're still seeing enough here, but not like what we saw at the peaks. At the peaks, it was pretty much 40, 50,000 plus days, even some 70,000 plus days there on the views. That's a lot of people coming through. It's over 20% of my audience or other people watching. So we're not at those stages, which leads me to believe that we are still around some sort of low or low forming, even if it does go another, who knows, 5, 10, 15% lower from this current price. I don't think it's the end of the world. So here is what we have coming up today. Cash rate. Australians, do you think we're going to drop? The forecast is to drop. I don't know if we'll get there, but you know, hopefully some of the home loans come down for people and we start to see the thing rocket up yet again. As for the US, there was a holiday yesterday. Trump's speaking tomorrow, our time anyway. I mean, every time he speaks, something fun happens. And apart from that, not really too much else is coming out for the US flash manufacturing PMI. Okay, so here are some of the big data chart points for the markets. This one is the global bull market. Well, there is a global bull market. Global bull market advanced decline line is in full effect, all-time high confirmation. This is essentially more stocks are hitting higher highs, new fresh highs, than they are declining. And overall, this is higher lows, or the higher lows continue to form here, high highs, higher lows. Therefore, the advanced decline is going up. You don't want to be shorting a macro bull market. This thing is absolutely wild. And it's part and parcel because of this. Literally, last 24 hours, a new 25-year all-time high record for the top 50 in Europe. So this is your top 50 stocks, Euro Stocks 50 index. The previous high was 5522, so 5,522 points. And just in the last 24 hours, we saw 5,524, so 2 points higher than the previous old all-time high set back in March of 2000, 2 weeks off March. 25-year record has been hit. Okay, put it down to inflation, put it down to whatever you want it to put it down to. As I always say, you've got to put your money somewhere, and it's either going to get eaten up by inflation in the bank if you're too scared that all these markets are manipulated and they're going to come collapsing down, which they eventually do, but it's got to go somewhere. And for a period of time here, if you are trying to sit out the market and wait for this collapse, it has been proven now to be the wrong thing to do. You don't want to be sitting out and just hoping that the market will eventually collapse or trying to short a raging bull market. So top 50 in Europe hit a new all-time high. We've been covering this on the channel and on X for many years now. You guys have seen it, and we're just watching this bull market carry on. You can see the higher lows form, the higher lows, the significant breakouts, the retests, and then the breakout. So the TA works on anything with a chart. It's being led by the UK, a new all-time high last week, and new fresh highs. Well, we're still trading in all-time high territory. There was another reasonable day up there yesterday. Germany's obviously been a really strong player. That is actually a new all-time high from yesterday. Strong weekly close last week. France playing catch up there. It's got less than 1% to go to a new all-time high for its stock market. And Netherlands, I believe, hit a new all-time high last week. Just a minor touch there. Oh, and Italy as well. just keeps screaming ahead. This is the stock market. Of course, people might see different things when it comes to the economy, but overall, the stock markets have been moving very, very well. Brazil also up there, pretty big day. Obviously not Europe, but part of the BRICS countries and the emerging countries. So investors are still seeing growth across the board here, especially if they're looking at 6 to 12 months. You know, if it's a forward reading mechanism, as some say, stock markets are up. I guess investors are seeing that there are good things to come over the next 6 to 12 months. Check out Russia as an example. Russia up for the last several days, breaking past 50% after rejecting at the 50%, then breaking past. Another good strong close there, 3,300 points for their stock market. Even when they're not trading with most of the world, it is up. And finally, we'll take a look at the Hang Seng. China's market was down there by 0.75, but the Hang Seng is up by 0.3 today. Yesterday, basically a flat day there. High, came back down, flat day there. So China's still in a relatively good position there, all things considered. And yes, it is still much, much lower than those previous tops, but you've got higher lows forming and attempting to put in some higher highs. And also the US dollar. So this was the big one that I looked at yesterday, the breakdown here. We've into the next trading day. We'll recap this tomorrow as more data comes through. But for now, we have an overbalance in price and an overbalance in time. So the S&P 500 trading very, very well at the moment. The consolidation at these highs, as we've talked about, continues to play out. This particular tweet here from Seth, another great one here. Booming fun fact just happened. Only 5 times in the S&P history, SPX history, has S&P undercut December low in Q1, gained greater than 3% by Valentine's Day. Rest of the year, double digits, double digits, double digits, double digits, double digits. What does that look like in a chart? Well, it said January undercut December low. So that's the January bar, that's the December bar. It undercut the low and then closed higher, and specifically greater than 3% by Valentine's Day. Maybe it's some sort of love effect, who knows? But if we take a look from the January low to Valentine's Day, there's Friday, there's Thursday, it's 5.56%. Generally, they look at closing prices. So let's have a look at the undercut, where it started to undercut the December low. Here, there's the close by Valentine's Day. Let me get my words out. 4.6%. So either way, it's above 3%. What happens next? You say it with me. Double digits, double digits, double digits, double digits, double digit growth. I caught you out on the last one there. 5 times, pretty excessive there for the S&P 500. So shall we see double digit growth for the S&P 500 in 2025? I think so. Let's have a look at what that would look like. Just taking it from the early part of January. There's your starting point. And double digits, at least to 10%, is about 6,500 points. Currently at 6,140 points. So some room to move there. If we take it to 20%, if we get there, it's going to be over 7,100 points. So another 1,000 points from where it currently is. I don't know if it's going to do that this year, but I'm just looking at these double digits. The lowest percentage was 11% and the highest was 20% there over these periods. Now, from my reading, there is 1 year of the years ending in 5 that had a down year, but it was so minor here. It's 2015, less than 1%. And that was after a pretty significant rise out of the 2009 low. So from that low to the high, 220%. We've already seen a down year in 2022, and currently looking to the top there is 74%. For this year, it's at 75%. So basically the same thing there. I think we've still got a pretty good 5th year of the decade to go. So another solid reason there. And I've taken this back to 1871, just looking at the overall, all the data here that we've got on TradingView, and the gray vertical lines here show the 5th year of the decade. Now you can just take a quick glance here. So far green, obviously, are just 6 weeks into the year. Red, very marginally, negative 0.7. Green, 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 even through the Great Depression, the peak in 1929, landed in 1932, which goes into alignment with our 100-year cycles. This typically happens through those years of the decade. Green, 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 green. Oops, red. 18. Nearly got that wrong there. 1875, not 1975, but 1875. There was a red year here, so 3.7% red for that year. So, I mean, the odds are stacked against the year being a red year, even with the fear that has come into the market at this peak. So long term, still seeing much, much further upside. The best fear and greed index that there is out there. No, not this one, but this one. The best fear and greed index out there. 47, it's at neutral. Yesterday, neutral. Last week, neutral. And this comes back to what I was talking about in the intro, looking at how this feeling was the same as 2022 and 2023 towards these lows. You can see the grinding effect here in fear. Of course, that was at the end of a very significant bear market, very quick bear market, some nice sharp declines there. And you would expect the sentiment just to grind around until people realize, oh, this thing actually isn't a bear market anymore. And they try to pile in towards the peaks like we saw in March of last year. So coming up to 12 months ago now, where people were piling in the high 60s and probably in those low $70,000 regions. That is the grinding effect. We see it again through 2023. You can see it grind around here from August into October until it took off, broke past 30,000. Remember those guys who were shorting 30, 32,000 and then tried to short it all the way to 74. So they say they were shorting it. Impossible. Impossible without getting liquidated there. There is a couple of points to note here. This is what I'm looking at for this current period, right? So you've got this grinding effect and then the price barely dipped much lower. Maybe we do get a bigger dip and that starts to reset the sentiment even further. And I think that would be that point where people really panic and say that this whole cycle is over, the game's gone, and they'll start to point towards sort of $60,000 or sub $50,000 prices. Of course, in the short term, which is not what I'm trying to predict here at all, we could see a bit of a rise. And the number that I've looked out for several times that I've mentioned to you guys is around a 103. So a close and consolidation above 103. Anything really to that point could be seen as a bit of a bull trap and a move back down. Now, you'd probably be wondering, why is the 50% there? Well, that's my level plus those tops, because I want to see the price get back above that significant day. That was the big liquidations day. And so I think there is a lot of relevance to that top. So yes, 99K, that would be the absolute bare minimum that you'd need to see price consolidate above, and ideally take out that top of the biggest liquidation day in history. For now, well, we're still seeing lower market sentiment continue to form, which is pretty much similar to these periods here. Bit of a spike, and then it starts to climb again from that point. 2024 pretty much did the same thing, just on a longer and larger scale. Now I'm just having a little go here at the CMC Crypto Fear and Greed Index. It has its relevance, so hopefully you haven't got to your keyboards yet to write down your little speeches down below about the Fear and Greed Index. The best thing about this is it has the most data, and it has been working very, very well for the whole crypto space, including Bitcoin. This one is tailored a little more towards altcoins and the emotional nature of gamblers and their impulsive mindsets. Yes, it's been sitting in fear for a lot longer, and I suspect it's going to remain in that for a little bit, for a while longer. Maybe a few pop-outs here, but I think it needs just a little bit more time to reset, as we've covered with the other data here. Looking at the liquidations, sitting somewhere around $250 million, which is still relatively low, considering what the market has been doing over the last 3 to 4 months. We'd need to see liquidations pick up again. Also, the exchange volume continues to drop. We've got the data here for the 16th down to 47 billion. I'd be somewhat concerned if we started to break the previous lows. We're sitting at 28 and $30 billion. Somewhere around 30 billion is where I would get a little bit concerned. The Google Trends picked up, but only after the weekend. So the weekend was lower, and it's basically somewhere around the same point it was from Friday. So pretty much weekday data is roughly the same, weekend data a little bit lower, but overall not that much interest has come back for the search terms of Bitcoin and crypto yet. Nice little tick up there looking at it in terms of the 90 days and then the 12 months pretty much on the downtrend here. So the longer we go out, the less interest there has been so far. Short term for BTC, pointed out that already. Any sort of moves above 99 is going to be interesting, but ideally above 103. Rejections at either of these levels, I suspect, is going to make us come back and test somewhere around the lows at 94 to 95K. And if that doesn't hold, then you're looking at the previous lows there at $89 to $91,000. Now, in terms of the pullback overall that I talked about earlier in the video, the current pullback is at 16% to the 89K low. So that's the low from January. You're still looking at about an 18%, so nothing out of the ordinary. And to come back to the major 50%, not the over like the bull market 50%, but the 50% for the August to January run up is still only a 27% correction from that top to the low. We did 33% last year, so 27% really isn't that big of a deal. If it were to happen, I want to see it test and then come back up relatively quickly, like what happened in August. Had a test, came back and held above the previous swing lows. Same deal happened when it tested that low from May in July. So there's July, tested the low, came back and closed just above that swing bottom. So some nice subtle signs there that the market was willing to support that price, at least for the short term. Some would call it a long term if they only have an hourly mindset, that held up for that entire period until August came and then again closed back above that price. So as I said with the title, feeling of the market is still relatively the same through those lows. And what happened with 2022, 2023, even into 2024, which was a 120% move from that August low to the top, people got bored, they got fed up, and they looked to sell out of everything towards those low periods, and they missed out on the run, chasing their tail again. It's happened multiple times, once, twice, 3 times, 4 times, and I'd even include this as, well, that is a massive time there, basically a 5th time there. Doesn't mean that the alts can't bleed out and go much further, so it's going to have to come down to whichever alts you are in and how much further you think they have to go. Yes, these are the times that build a bit more of a Bitcoin maximalist mindset, but why wouldn't it? Especially when Bitcoin has only done about a 16% correction from that top, 12% actually at the moment, and altcoins have basically died 60, 70, 80% in some cases. They're probably not the best segue talking about crypto exchanges at this point. However, they are much easier to create accounts on when the market is dull. So if you don't already have an account, check them out. And the flip side to everything is you don't have to use them. You can just create the account, have it ready to go if you need to. And for BYBIT in particular, we've got some exclusive benefits down below, but more importantly, you can also get a crypto debit card. You can put crypto onto the debit card. I've shown you that before. Here is mine, crypto debit card, and you can spend the crypto straight off the card. So if you don't want to trade and you get triggered about all of these exchanges and you got something in you emotionally that makes you repulsed by exchanges, you got to use them. That's what we have to trade on. That's where we do it. And if you get a nice little, crypto debit card to go and spend your crypto with, and you can earn some interest in the meantime on it, why not? But just be safe out there because you just don't know how these things are going to go towards the end of the cycle. What happens in 12 months time? We've seen many exchanges not produce what they need to produce. So stay safe no matter what you're doing in the crypto space. That's why there is still a lot of reward to the upside, because there is still a lot of risk no matter what we do in the crypto space. The USDT dominance, basically trading around here again, 4.4%. The idea above here, not great for Bitcoin and cryptos. Below here, going to be an absolute party for Bitcoin and cryptocurrencies. For now, still trading above, as I said, 4.4%. A little bit of an interesting bottom that's formed here. So tomorrow I'll keep following this up if we've got a little more information there. For Ethereum, still needs to get above 2,900. Lots of talk about Ethereum taking over the game again. And if we take a look at Sol versus ETH, you can see that the Solana dominance has basically dropped off a cliff here against ETH, because Solana has also continued to fall overnight, breaking the previous 3rd of February low, now sitting at $175. Looks like it wants to continue down lower. 50% that it needs to hold above now is $151. That goes all the way back to the bear market low, connected to the all-time high. Remember this 3-bar rule that we used at the top? You had the 3 bars, 1, 2, 3 lower highs, lower lows, and it also showed up on the weekly chart. Yes, the price did go above it, but no daily closes, no weekly closes above the signal top. Really, really important one to remember. The 3-bar rule has worked out very, very well again for, in this case, Solana. So it's still showing a lot of weakness there. SUI, on the other hand, it had some reasonable strength here. It's holding above 290 for now. But this was the top signal that I was looking at and shared with you on the channel in real time. It takes time to play out. This day here closed underneath the previous tops, and you can see the volume basically started to wear off really thin. There's just no more buying potential that came through at that peak. You had one big day up, and then it just could not follow through, and then closed down on slightly increased volume, or relative, it's increased from the weekend, of course. And then that started to show some weakness at the top. Now, SUI is down 40% from that high. Now I'm tracking this for another re-entry point because there is still relative strength overall. It hasn't broken down from the previous tops that we saw back in 2024. And I think this is just a bit of a cooling off period that could extend for at least another month or so. And looking at the previous move down, there was about 130 days to get to that final low. So SUI still very much up on my list there. XRP sitting above 50% at around $2.60, still above those previous lows, but at the moment it just continues to fail. You got significant volume compared to the several previous trading days, and that put in the top so far. So it hasn't broken out from 260 yet, but if it does, I suspect it's going to come back and test around 220. But it's not the end of the world. Could just be another re-entry opportunity further down. It's only done a 47% drop, and a 60% drop would take it somewhere around 135, and that's not out of the question. It wouldn't necessarily break its own bull market. And in terms of a timing here, I'm still looking out to at least somewhere around July 2025 for another significant move. So although there can be a shorter term move to the downside, it still seems in a relatively strong position considering the other large caps like DOGE. I have to talk about DOGE first before I get to the last one here. It's been rejected at 28 cents and is now coming back to test those lows. So a failure to break past key resistance levels. Look at that massive 50%. Comes back and tests the lows. It happens time after time after time. This is the stuff that we go through week after week, day after day with members, so you can learn how to implement this for your own trading and investing strategies, whether it's hourlies, 4 hourlies, dailies, weeklies. It's the same thing on the charts. You just have to remove that emotion. So at the moment, it's come back to test around 25. Next level is around 24, and then you got the level back at the lows around that 20-cent level. Now, the really interesting one here is ADA. It is testing 50%, I think for the 3rd or 4th time here. So it needs to see a breakout and a close above 82, 83 cents. And that could set it up in a reasonable position to tackle that next resistance levels. For now, it's at the make or break. It's hit that line again, just like we showed with DOGE, where it hit the 50% and came back. So the make or break needs to get above 82 cents and consolidate at that level. Otherwise, you'll be looking for some tests of the previous swing low, 76 cents, and then we could come back to somewhere under 70 cents. Now, before you get on your high horse about ADA and these other ones, when you look at them versus BTC, they have still not performed as well as BTC throughout the entire cycle. You can see from the low to the current price, 262%. Bitcoin's done 400, 500%. That's the thing you need to look out for if you're holding these things longer term. So on the flip side to that, when they start to show some liveliness, some volatility, and potentially some strength as well, that can be the time to get in on them. 620 days from the June low, because it went lower after the cycle bottom, and that was the Bitcoin cycle bottom there in November and December. It went lower than that, so it's been a relatively weak coin overall. Some of these things can get back into stronger positions. They just take a lot longer. They pump and they dump, like what happens with XRP. Does nothing for a very long time. Then you got to get in on one trade, hopefully make your gains, get out. And then if it does do another pump from there, maybe you're just holding a bag that is risk-free, as I've talked about in previous videos, basically taking your initial capital off the table and then just watching the thing ride so that you can take your emotions out of the market, which helps with your patience in this game. I thought I'd bring it full circle back to the beginning. Like, subscribe, and if you want to support no bullshit trading and investing education here on the channel, make sure you share it with a friend and family. Check out the video that is popping up right here, and I'll see you back at the next video. Till then, take care and peace out.